Oil has just given a very clear signal. In this market, news of war can skyrocket prices, but a single expectation of a truce can make them fall sharply. This March 25th, 2026, Brent fell about 4% to the $100 per barrel range, and WTI dropped to the $89 range because signs began to circulate that a diplomatic path could open to halt the Middle East crisis. What changed the market's tone was the idea of a possible ceasefire. According to Reuters, the United States has reportedly sent Iran a 15-point proposal to try to find a way out of the conflict. That was enough for many traders to take profits after the sharp rise the previous day, when both contracts had climbed nearly 5%. In other words, the market isn't saying the problem is over, but rather it's pricing in a possibility of decompression. But pay attention, because the structural risk remains intact. The Strait of Hormuz remains one of the most sensitive points in the global energy system. More than a quarter of global maritime oil trade passes through there, and nearly a fifth of world consumption of oil and derivatives. When that artery is blocked or becomes unsafe, not only does crude rise, but the entire global energy logistics is strained. That's why today's drop shouldn't be read as a sign of total tranquility. Iran announced that non-hostile vessels could transit through Hormuz if they coordinate with their authorities, but at the same time, attacks in the region haven't stopped, and several analysts continue to warn that volatility may persist as long as there's no certainty about the actual duration of a truce. In other words, the market eased, but it didn't relax. Furthermore, Saudi Arabia is already making moves to reduce the operational blow. Exports from Yanbu on the Red Sea rose to nearly 4 million barrels per day as part of the strategy to bypass disruptions in Hormuz. And at the same time, in the United States, crude and fuel inventories showed weekly increases, which also helped cool prices because it suggests a momentary breather on the supply side. The conclusion is that oil fell today, not because the risk has vanished, but because the market saw a small window of escape. But as long as Hormuz remains constrained, the geopolitical premium will stay alive. In this business, peace lowers prices, uncertainty sustains them, and any break in that fragile expectation can reignite the barrel in a matter of hours. If you like these videos, give it a like, subscribe, ask, comment. This is Trend Oil Vision. Understand oil like a professional. Thank you.